S&P 500 just had its worst day of 2025, and this comes just 2 days after it hit its all-time high. So what does this mean for long-term investors into FXAIX? Should you panic or should you see days like this as opportunities? Today we're going to be talking about what triggered this sell-off, the benefits of investing into FXAIX, and more. So when the market takes a turn, it makes the investors fearful, uncertain as to whether they should hold, sell, or buy more. But history has shown us that if you are a long-term investor, these can be great opportunities. Let me know in the comments, are you currently holding FXAIX in your portfolio? Are you trying to determine whether it's a good fit for you to add it? I want to hear about your strategy and where you are in your investing. Let's get back to the market update, and I'm going to share my real numbers when it comes to investing into FXAIX. On Wednesday, February 19th, 2025, the S&P 500 hit an all-time high, and the biggest contributors were NVIDIA, AMD, Microsoft, and other AI-driven tech stocks. So investors were feeling confident in the economic growth. And then just 2 days later, on February 21st, 2025, the market crashed. The Dow and S&P had their worst day of 2025, and the Nasdaq also dropped sharply. As we can see, the market can change very fast. So what caused this crash? Let's talk about some of those economic triggers. High inflation. The latest CPI, Consumer Price Index report, showed that inflation isn't cooling as fast as expected. Investors fear that the Federal Reserve may keep interest rate high for longer. And what does that mean? Higher interest rates equal more expensive borrowing and slower economic growth. There's also been weaker consumer spending. Retail sales came in lower than expected. Just a few days ago, Walmart had their earnings, and it signaled a slowdown in consumer spending. And a slowdown in spending often signals recession fears. Another factor is the jobless claims. More people have filed for unemployment benefits than economists had predicted. Another flag of an economic downturn. So the markets react emotionally in the short term, but we need to have our long-term vision on when it comes to investing. So now let's talk about what is FXAIX and why do I invest into it? It's the Fidelity 500 Index Fund. And here are some key details about this fund. It has a low cost and it is a passively managed fund that mirrors the S&P 500. It has an expense ratio of 0.015, which is incredibly low, allowing you to keep more of those gains. It invests into the U.S. top companies across multiple sectors. Here's a look at those top companies in this fund. It is tech heavy with Apple, Microsoft, NVIDIA, Google, and Amazon, but it also gives you that diversification covering sectors like healthcare, financials, consumer goods, and industrials. Historically, the average rate of return for this investment has been 10%, but investing can be a roller coaster ride. It doesn't go straight up. Looking over a year's time, we see that the price fluctuates up and down. So I'm not looking at my investments day to day. I'm looking at my investments for the future, 2030, 2040, and beyond. And when it comes to investing, there will be some red years. Looking here over a 5-year time frame, we see that in 2022, we had a negative return of 18%. And then a strong recovery with higher than average returns in 2023 and 2024. And if we look back across the entire existence of the S&P, we see that same kind of a trend. There will be some red years, but the fund always recovers. So what happens after the market drops? Historically, big crashes can create buying opportunities. For example, in 2008, there was a massive drop. We can see it right here, but then a huge recovery over the next few years. The same thing in 2020 with the COVID crash. Many stocks tanked, but then hit historical highs by 2021. If you are a long-term focused investor, these market dips should excite you and give you the opportunity to go heavier if you have those funds available to you. You can also incorporate dollar cost averaging to help avoid any bad timing when it comes to your investments. And long term investing and buying on the dips gives you a chance to lower your cost basis, meaning more gains when the market rebounds. So recently, Warren Buffett sold all of his investments that give exposure to the S&P 500. He had SPY and VU in his portfolio, which were smaller positions of his overall portfolio, but he's focusing on individual stocks. But I believe that he would still give you and me, the average investors, the same advice that he always gives, which is this.
If I had a choice today for a 10-year purchase, I'd buy the S&P in a second.
Let's take a look at my actual numbers. And I'm taping this on the weekend after that market drop on Friday. So I'm okay with sharing my portfolio through the good and the bad. So leave me comments and let me know if you've been investing into FXAIX. What's been your experience so far? Are you buying more, holding, waiting for another dip? Here's a look at my real numbers, and I will talk more about my strategy. So my average cost is $161.22. The current price is $209.13. I've been investing into FXAIX for a little over a year and a half now. I'm currently up 29.71%, and I have almost 735 shares. But on the day, that biggest drop that we've had so far in 2025, I'm down 1.71%, which has me down $2,660. But my portfolio is still up by that 29.71%, which has me up $35,000. And I did add to my position on Friday. I also added to some other positions that were also red on the day, like my Main Street Capital and Microsoft. Looking back over the last 5 years, this fund is up 80.22%. But as we already took a look at in 2022, it was down 18%. So we have to be ready for those years and stay steady and consistent with our investing strategy and our plan. We need to just put that work in to choosing our investments. And once they are in our portfolio, be patient and ready for the bad days, months, or even years. So when it comes to FXAIX, you also get paid a quarterly dividend, which is a low one of 1.21%, but it all adds up and it helps to build your portfolio up. This is my last dividend payment that I received in December, which was reinvested to buy more shares. So the S&P 500 crashing or having a pullback is temporary. I believe that long-term investing wins. I believe that FXAIX is one of the best options for passive, low-cost investing. And another thing that I want to point out is that you have to invest into this fund through Fidelity and keep it on the Fidelity platform. But unlike other brokerages, there is no minimum to invest. So you can get started no matter what your budget is. Evaluate your portfolio, see the buying opportunities, and don't panic. I am Lisa J. Stocks. I hope you enjoyed this video. If you're not already, subscribe, give this video a like, hit that notification bell so you can keep up with all of my videos and live streams. I have all of my retirement investments and my daughter's investments at Fidelity, but I have investments for different reasons. So if you're ready to open a new brokerage account, check out my referral links for MooMoo and Weeble. They will be in the description and pinned in the comments. Thanks for watching. Make sure to leave me some comments, your thoughts, your questions, or even a yellow heart just to let me know that you were here. Okay, bye.